Welcome to our daily Forex market analysis, and this is for trading on May the 13th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. Like my computer is being slow. All right, so in terms of the data that came out today, just a quick thing, the CPI numbers out of the US were below expectations here. And another thing we have seen that's going on in the market or happened in the market today was we had some Fed members speaking, and essentially the message has been that they are not looking at negative interest rates, at least at this point. And tomorrow we have Powell speaking. So if we hear the same sort of stance from Powell as well, then basically for this, at this point right now, we are not going to see negative interest rates, even though some of the markets have been pricing in the negative interest rates. So that should be good for the US dollar. Now, Fed has been saying that they are going to support the markets and they're going to provide as much stimulus as is necessary in order to do that. But for now, no negative interest rates. Coming up here shortly, we have Reserve Bank of New Zealand here. In terms of the rates, they are already at low rates, so not really looking for an interest rate cut. And I would not expect them to talk about negative interest rates either. So the main focus here will be on the monetary policy statement and comments in regards to how the Reserve Bank of New Zealand is viewing the economy going forward. So what are their forecasts for 2020 and 21, and what are they basically thinking in terms of providing support to the economy? And then coming up on Wednesday here, we have preliminary GDP numbers here from UK. So we did see British pound drop today. In the last couple of days, we have seen a downward trend in British pound. A lot of that has to do with the economy, or I should say the economic lockdown right now. We are there was a back and forth in regards of when the economy will open up, and as a result, we have seen a negative impact on British pound. And as the different economies are opening up now, market is starting to realize that we may get more virus cases, and already we are seeing more of these or a growth in the virus cases with a little bit of restrictions that have been lifted so far. So we'll keep an eye on that as it develops, but markets did take a negative view today. So for the last 2-3 days here, we have been watching the markets to see if they're going to turn, because they have been showing signs of topping, and today we did see a big drop in the equity market. So we'll take a look at that in just a bit. And coming up tomorrow as well, we have PPI numbers here. PPI is the purchasing the PPI number here, we see that with the CPI numbers dropping here, that was negative for the stock markets. And also another thing was we also heard from Dr. Fauci saying that opening up of the US economy is going to cause a lot more heartache, and the number of deaths will go up. Right now, US is already at the highest number of deaths related to coronavirus, and if the economy is opened up, then we are likely to see a lot more numbers, and that was also a negative sign for the stock market. And then here for the PPI numbers here, with the concerns around deflation, so the CPI numbers did not come in too well. So which means that the prices of goods are dropping already. And that makes sense because a lot of people are actually not purchasing stuff. People are more concerned about what's going on. Also, a lot of stores are closed. So right now, not as much buying is going on. So price of goods, it makes sense that price of goods would drop. So CPI number is dropping. And here, the PPI numbers, if they come in below expectations, again, we could see a similar impact that we saw from the CPI numbers coming in below expectations. And then, of course, we have Powell speaking. This will be important, even though we're not expecting a big change, but because the market has been pricing in negative interest rates, Powell's speech will become more important. So we'll have to pay attention to how he sees the market and what is he thinking in terms of the monetary policy from the Fed. And of course, we have Reserve Bank of New Zealand Governor Orr speaking tomorrow again. And then we have employment data out of Australia. So last time we did see a positive number here in terms of people getting jobs, but right now we are expecting a big drop. And if the numbers are worse than expected, then that will be negative for Australia. We have seen Australian dollar go up continuously in the last 4 days. But if the numbers are higher here, or I should say lower, or more negative, then that would be negative for Australian dollar. And already we are expecting a much higher unemployment rate. So if the numbers are positive though, that means they're not as bad as what the expectations are. We have seen that Australian dollar has gone up on that type of a news. So keep that in mind. So let's move on to our charts now. As usual, we'll start off by taking a look at euro dollar here. So in regards to the euro, yesterday we did see a bit of a drop. It didn't quite get to our target level here. It turned prior to that, and we have seen price go all the way up into the top of the range. Now, this is an important support resistance level, and as we can see for the last over a week here, price has been trading sideways within this range. Now, price went into the resistance today and it wasn't able to hold there, and it has dropped. So I would look for a potential retest of the high or a bit of a pullback here. Then I'd be looking for price to come back down towards the bottom of the range here. So my bias here is more to the downside, but within the range. So target here is 1.0780 as the first target, and only if it breaks through the support level, which is important support resistance level here, next target would be 1.0765. So right now a bias is bearish within this range here, but for some reason, if it does break through, then we could see it go higher. For now though, my base case scenario is looking for that range bound move. So looking for price to drop within the range. Pound dollar here, this one dropped nicely today. We do see that price is right into the support, so we have to be careful with that, but bias is bearish. And in terms of a pullback, we may see a pullback into 1.2280. So watch out for that, and then looking for a further drop here. Now today we have seen some inefficient moves, so watch out for that. Sometimes we see price moves too fast and then it goes and fills in that inefficiency. So be mindful of that. But for now, I am biased to the downside here on pound dollar. First target 1.22 and then 1.2160. So bearish bias here for pound dollar. Aussie dollar here, this one was neutral, but overall it has been holding below the top of the range. We saw that price rejected the top here. We had double top on the daily, and then from yesterday we have been seeing lower highs and lower lows. So even though today's candle is neutral, it does have bearishness in it, and we are definitely trending to the downside. So bias here is to the downside as well. And in this case, the first target would be the base of today's candle, which is 0.6430. And then below that, we're looking at 0.6380. So bearish bias here for Australian dollar. And then coming up here, we have New Zealand dollar. The candle close here is neutral. Now with the central bank, Reserve Bank of New Zealand monetary policy statement coming up, I would be a little bit more I'm neutral on this one. The candle close for the day is neutral as well. But as long as price holds below the resistance level, either at 0.6120 or slightly higher here, the top of the range here, I'm still more biased to the downside. So for now, a bias is neutral to bearish here, and target is 0.60 and then 0.5920. So neutral to bearish bias for New Zealand dollar. So in this case, if we see that New Zealand dollar gets driven upwards because of Reserve Bank of New Zealand, I would still expect it to come back down at some point because of what's going on in the market right now. So Australian dollar, New Zealand dollar are tied into our stock market, so risk on, risk off environment. So we have been over the last few days in the risk on environment, and today we have seen a shift in that environment. So we have seen a shift from risk on to risk off mode now. And as a result, we have seen a drop in the stock market, which means we are likely to see a drop in Australian dollar and New Zealand dollar as well, because when the markets are doing well, or the stock market's doing well, these two currencies go up as well. So because of that overarching risk off environment, I would expect this one to drop. Dollar CAD here, this one is looking bullish. Yesterday we were looking for a move higher, we got that. And next target here is 0.4120. Now we may get a pullback into 0.4040, so keep an eye on that. But bias here is bullish, and I will look for price to move further. First target here is 1.4120, and then we have 1.4170. So bias is bullish for dollar CAD. Silver. Silver has held sideways here for the last few days. And normally silver and gold are not correlated to the stock market, or they don't move in the same direction. They're correlated, but they're not positively correlated. But lately, or since the pandemic, we have seen them all move in the same direction. So with the stock markets dropping, I would expect this one to drop as well, especially since it's held below the resistance level here. For the last 3 days, it has tested that resistance level and has not managed to close above that. So now I'm looking for a drop here. So in this case, the first target would be 15.20 and then 15. So bearish bias for silver. Gold here, gold has been going sideways as well for the last couple of days. As we can see, price has been trading in this range here. And so bias here is neutral for both of these days. We have seen that price has gone sideways. Now, what I'm looking for here is, as long as price stays below the 1711 level, I am looking for a drop here. So 1692 is the first target, 1680 is the second target. So bearish, slightly or neutral to bearish bias for gold here. Oil hasn't really done a whole lot. It's going sideways. Bias is neutral at this point. Now the question would be, is it going to hold above the 24 level? So we are seeing that price is basically stable at this point. Now it's not as low as it was, but the demand hasn't gone up either, and that's why it's just been trading sideways here. Now, in terms of the oil inventories, we are seeing the oil inventories at all-time highs. So we may be running out of storage, which would mean that production cuts will become very, very important. So basically, keep an eye on this. If it goes through the resistance, only then would I be looking for this next target. At this point, I'm just neutral on this, looking for it to trade between 27, 30 to 24. So neutral bias here for oil. Copper here, copper has dropped like we expected it to from yesterday. Right now, bias is bearish. Watch out for a bit of a pullback here into 2.30, and then looking for a drop. First target is 2.27. And second target is 2.24. So bias here is bearish for copper. Bitcoin here, Bitcoin dropped over the weekend, and now it's just been holding its own. It's holding above the support level here at 84.30. We do have a bullish candle close. However, it is into resistance. So as we can see, it's kind of sideways right now. So what I'm looking for here is a retest of the high from today, which is 89.30 or 89.50 level. And if it goes through it, then I will look for a move higher all the way into potentially into 94.50. Well, first target would be 91.50 and then 94.50. But it would have to go through that for that to happen. What could happen is it goes into resistance and then drops from there. So watch out for that type of a move. So right now I'm bullish to neutral on Bitcoin. S&P 500, this one finally dropped. We had been looking for a move here for the last couple of days here. So finally we have it. So bias here is bearish. My only concern would be if you take a look at the 1 hour here, this is a very inefficient move, and inefficient moves tend to get filled. So if you go backwards here, we haven't really, we did have this big inefficient move to the upside and see how it got filled. So at some point that may get filled. We don't know whether it'll be tomorrow or a few days down the road. For now though, bias is bearish based on the big solid bearish candle close here. It is into support, so we have to be careful with the support level. If it doesn't break through the support, it can turn around. But for now, first target is 28.80, and then we're looking at 27.50. So bearish bias for S&P 500. Nasdaq here, this one as well, looking bearish, and I would look at a potential pullback into 9100. But next target here is 89.50, and then we have 88.50. So bearish bias for Nasdaq as well. Dow Jones here, this one has dropped, like we were talking about yesterday. Next target here, 23,280, and then 22,900. So bearish bias here. We could get a bit of a pullback here into 23,800. So watch out for that level. But bias here is bearish. First target 23,280. Second target 22,900. DAX here, this one's looking bearish as well. Nice bearish candle close. Next target is 10,500. And below that, 10,400. FTSE as well, we have a nice pin bar here. Next target is 58.20. And below that, we're looking at 57.50. And last but not least, Nikkei. Nikkei has a bearish engulfing candle for the day, so looking for a further drop. This is looking bearish. Next target is 19,900 and then 19,750. So bias is bearish here for Nikkei as well. So that's it for today. You guys have a wonderful trading day, and I'll see you again tomorrow. Bye for now.